Mabuhay everyone! Kumusta? In today's virtual discussion, our group will discuss the last topic on reading in Philippine history, which is taxation. But before we get into the discussion, I would like to suggest everyone to get their pen and a piece of paper for the reason of taking notes of the important informations that are not mentioned in the PowerPoint presentation. So without further ado, all you need to do is relax, listen, and let's get into the video. Or discussion rather. But first, let us all know what is taxation. Taxation is the inherent power by which the sovereign state imposes financial burden upon person and property as a means of raising revenues in order to defray the necessary expenses of the government. The imposition of financial changes or other levies upon taxpayer by a state such as failure to pay is punishable by the law. Taxation is a mode by which government make exaction for revenue in order to support their existence and carry out legitimate objective. Government use tax revenues to pay soldier and police, to build dams or roads, to operate schools and hospitals, to provide food to the poor and medical assistance or medical care to the elderly, and for hundreds of other purposes. Without taxes to fund its activities, government could not exist. Tax is the most pervasive and strongest of all other power of the government, because tax are the lifeblood of the government, without which, like I said, its projects cannot subsist. After knowing what is taxation, let us all know what are the essential characteristics of tax. First, tax is an enforced contribution. Take note of the word, enforced contribution. Second, it is generally payable in money or by money. Third, it is proportionate in character, usually based on the ability to pay. Fourth, it is levied on persons and property within jurisdiction of the state. Fifth, it is levied pursuant of legislative authority. The power to tax can only be exercised by the lawmaking body of Congress. Sixth, it is levied for public purpose. 7. It is commonly required to be paid at regular intervals. After knowing the essential characteristics of tax in the Philippines, let us all know the different type of tax in the Philippines. There are different kinds of taxes in the Philippines, but we can group them into two basic types, namely national taxes and local taxes. National taxes are those that we pay to the government through the Bureau of Internal Revenue. National taxation is based on the National Internal Revenue Code of 1997 or the Republic Act No. 8424, otherwise known as the Tax Reform Act of 1997. As amended, the import and export tariff levied by the Bureau of Customs under Republic Act No. 1937, otherwise known as Tariff and Custom Code of the Philippines, can also be considered as national government taxes or duties. Here are some of the examples of national taxes. First, income tax. Income tax is a tax on all yearly profits arising from property, professions, trades, or offices, or as a tax on a person's income. Self-employed individuals and corporate taxpayers pay quarterly income taxes from first quarter to third quarter. Second, percentage tax. It is a business tax imposed to persons or on persons or entities who sell or lease goods, properties, or service in the course of trade or business whose gross annual sales or receipts do not exceed the amount required to register as VAT registered taxpayers. Percentage taxes are usually based on the fixed rate. They are usually paid monthly by businesses or professionals. Third is value-added tax. It is a business tax imposed and collected from the seller in the course of trade or business on every sale of properties, lease of goods or properties, or vendors of service. It is an indirect tax, thus it can be passed on to the buyer, causing this to increase the price of the most goods and services bought and paid by the consumers. Fourth is excise tax. It is a tax imposed on goods manufactured or produced in the Philippines for domestic sale. or consumption or any other disposition. It is also imposed on things that are imported. Fifth, donor's tax is a tax on a donation or gift and is imposed on the gratuitous transfer of property between two or more persons who are living at the time of the transfer. Donor's tax is based on the graduated schedule of tax rate. Sixth is estate tax. Estate tax is a tax on the right of the deceased person to transmit his or her estate to his or her lawful heirs and beneficiaries at the time of death, on a certain transfers which are made by law or equivalent to testimoniary disposition. Estate tax is also based on the graduated schedule of tax rate. The other type of tax is the local government taxation in the Philippines. It is based on Republic Act 7160, or otherwise known as the Local Government Code of 1991 as amended. These taxes, fees, or charges are imposed by the local government units such as provinces, cities, municipalities, and barangays, who have been given the power to levy such taxes by the code. Here are some of the examples of local taxes in the Philippines. Tax on transfer of real property ownership. Tax imposed on the sale, donation, barter, or on any other mode of transferring ownership or title of real property. Second, tax on business of printing and publication. Tax on the business of persons engaged in the printing and or other publication of books, cards, posters, leaflets, handbills, certificates, receipts, pamphlets, and other of similar nature. Third is professional tax. An annual professional tax on each person engaged in the exercise or practice of his profession requiring government examination. Fourth is amusement tax. Tax collected from the proprietors, lessees, or operators of theaters, cinemas, concert halls, circus or boxing arenas, and other places of amusement. Fifth is service fees and charges, or charges rather. Fees or charges that may be collected by the barangays for service rendered in connection with the regulation of the use of barangay-owned properties or service facilities such as palay, copra, or tobacco dryers. Sixth and the last one is barangay clearance, a reasonable fee collected by barangay upon issuance of barangay clearance, a document required for many government transactions, such as when applying for business permit with a city or municipality. And now, let us all know the different era of taxation in the Philippines. So first on the list is the pre-colonial era. During the time before the Spaniards came, the country had various kingdoms called barangays, which was ruled by the datus or rajas in some areas, who offered protection to all its subordinates. Since barter was the leading form of trade back then, tax, called buwis or handog, with the variant handog, came in forms of crops or goods, which the people living under the datu share a portion of their harvest or property in exchange for security and protection. Take note, only the timawa or the freemen pay taxes, since the maharlikas or the nobility and the datu are the one who offer protection, while the uripon or uripon, which are known for being slaves, couldn't afford or offer anything since they lived to serve. The second era was the Spanish era. During the 17th and 18th centuries, the Contador de Resultas served as the chief royal accountant, whose functions were similar to the Commissioner of Internal Revenue. He was the chief arbitrator, whose decision on financial matters were final, except when revoked by the Council of Indies. During these times, taxes that were collected from the inhabitants varied from tribute or head tax of 1 gold mace annually, tax on the value of jewelry, gold, trinkets, indirect taxes on tobacco, wine, cockpits, burlas, and powder. From 1521 to 1821, the Spanish treasury had to subsidize the Philippines in the amount of 250,000 peso per annum due to the poor financial condition of the country, which can be primarily attributed to the poor revenue collection of system. Other form of taxes from the Spanish era is the tributo, which was originally between 8 to 10 reals. Forced labor, or the polo y servicio, was also a network for tax payment. Eventually, with the cedula, Spain replaced tributo with cedula, which allowed them to keep track of the people who could pay taxes. The encomienda system, which is land ownership granted by the crown to the worthy peninsulares, was yet another form of tax income from the Filipinos. The diezmos prediales is 1/10 of the produce of the encomienda to be paid to the viceregal government, and the sanctorum was the tax paid to the local church. Other local taxes were the vinta, tax paid by people in the provinces along coast of western Luzon to defend the area against Muslim pirates common at that time. And the donativo, the zamboanga, was tax especially used for the conquest of Jolo. Listed below is a sample of Filipino tax during the Spanish occupation. First, tributo, or the encomienda tax, 10 reals. Diezmos prediales, or government tax, 1 real. Commission on Internal Revenue, 1 real. Sanctorum, 3 reals. The third era is the American era. In the early American regime, from the period of 1898 to 1901, the country was ruled by American military governors. In 1902, the first civil government was established under William H. Taft. However, it was only during the term of second civil governor Luke E. Wright that the Bureau of Internal Revenue, also known as BIR, was created through the passage of Reorganization Act number 1189 that was dated on July 2, 1904. On August 1, 1904, the BIR was formally organized and made operational under the Secretary of Finance, Henry Ide, author of the Internal Revenue Law of 1904, with John S. Hord as the first collector or commissioner. The first organization started with 69 employees, which consisted of the collector, vice collector, 1 chief clerk, 1 law clerk, 1 records clerk, and 3 division chiefs. Following the tenure of John S. Hord were 3 more American collectors, namely Ellis Cromwell, William T. Holfing, and James J. Rafferty. They were all appointed by the Governor General with the approval of Philippine Commission and the U.S. President. During the term of Collector Holfing, the Bureau had its first reorganization on January 1, 1913, with the creation of the 8th Division, namely Accounting, Cash, Clerical, Inspection, Law, Real Estate, License, and lastly, Records. Collections by the Real Estate and License Division were confined to revenue accruing to the city of Manila. In line with the Philippinization policy of then U.S. President William McKinley, Filipino collectors were appointed. The first 3 BIR collectors were Wenceslao Trinidad, Juan Pasadas Jr., and Alfredo Yatao. On May 1921, by virtue of Act No. 299, the Real Estate, License, and Cash Division were abolished and their functions were transferred to the city of Manila. As a result of this transfer, the Bureau was left with 5 divisions, namely Administrative, Law, Accounting, Income Tax, and Inspection. Thereafter, the Bureau established the following. First, the Examiners Division, formerly the Income Tax Examiners Section, which was later merged with the Income Tax Division. Second, the Secret Service Section, which handled the detection and surveillance activities but was later abolished on January 1, 1951. Except from minor changes and the creation of the Miscellaneous Tax Division in 1939, the Bureau's organization remained the same from 1921 to 1941. In 1937, the Secretary of Finance promulgated Regulation Number 95, reorganizing the provincial inspection districts and maintaining in each province an internal revenue office supervised by a provincial agent. The fourth era was the Japanese era. At the outbreak of the World War II, under the Japanese regime, on 1942 up until 1945, the Bureau was combined with the Custom Office and was headed by a Director of Customs and Internal Revenue.
Post-war era. Nung nakuna ng Pilipinas ang kalayaan noong July 4, 1946, ang Bureau of Internal Revenues o BIR ay nare-establish separately. Ito ay patungo sa pagsasaayos noong October 1, 1947. Sa ilalim ng Executive Order 94, ito ang mga sumusunod sa batas na ito: Accounting Unit, Revenue Accounts at ang Statistical Division ay pinag-isa. Lahat ng records sa Record Section under Administrative Division ay pinagtibay at panghuli, lahat ng legal works ay ipinaggitna sa Law Division. Ang Revenue Regulation Number Volume 2 dated October 23, 1947 ay hinati sa 31 inspection units ng bansa. Bawat isa ay nasa ilalim ng Provincial Revenue Agent except sa Special Unit. Ang pangalawa namang malawakang pagbabago sa BIR ay naganap noong January 1, 1951 sa pagpapatupad ng batas ng Executive Order 392. Tatlong bagong department ang ipinatupad sa nasabing taon. Ito ay ang Legal, Assessment, at Collection. Sa katapusan ng January 1951, ipinatupad ang Memorandum Volume 188 ay ipinatupad ng Withholding Tax Division of the Assessment Department. Ito ay naayon sa Republic Act Number 690. 25% total income ang kinokolekta sa panahong iyon. Sa pangatlong reforma sa BIR noong March 1, 1954 sa Revenue Memorandum Order Number 41, nagkaroon ng 4 na office dito. Ito ay ang mga Specific Task Division, Legislation Section, Processing Section, at Revenue Examiner. At noong 1964, ang Pilipinas ay naging 15 regions at 72 inspection digits. Marcos Administration. 1965, Ms. Elvera was appointed as the Commissioner. Blue Master Program was adopted to curb the abuses of both the taxpayer and BIR personnel. Voluntary Tax Compliance Program was designated to encourage professionals in the private and government sectors to report their true income and to pay the correct amount of taxes. 1970, provide each taxpayer with their permanent tax account number or TAN. Executive Order Number 206, the payment of taxes through banks. 1972, several tax amnesty decrees issued by the President were promulgated to enable erring taxpayers to start anew. Organization-wise, the Bureau had also undergone several changes during the martial law period, 1972 to 1980. 1976, President Marcos promulgated the National Internal Revenue Code of 1977, which updated the 1934 Tax Code. 1980, the Bureau was further reorganized under the administration of Commissioner Ruben Anceta, New officers were created and some organizational units were relocated for the purpose of making the Bureau more responsive to the needs of tax-paying public.
Cory Aquino administration. After the People Revolution in February 1986, a renewed thrust towards an effective tax administration was pursued by the Revenue Operation Walang Lagay, was launched to promote the efficient and honest collection of taxes. On January 30, 1987, the revenue was recognized under the administration of Commissioner Bienvenido Tan Jr. pursuant to Executive Order EO number 127 under the said EO. Two major functional groups headed and supervised by a deputy commissioner were created, and these were the Assessment of Collection Group and the Legal and Internal Administration Group. With the advent of the value added tax, VAT, in 1988, a massive campaign program aimed to promote and encourage compliance with the requirements of the VAT was launched. The adoption of the VAT system was one of the structural reforms provided in the 1986 Tax Reform Program, which was designed to simplify tax administration and make the tax system more equitable. It was also in 1988 that the Revenue Information System Service, Inc. RISSI was abolished and transferred to the BIR by virtue of a memorandum order from the Office of the President dated May 24, 1988. The transfer had implication on the delivery of the computerized requirements of the revenue in relation to its function of tax assessment and collection. The entry of Commissioner Seong in 1989 saw the advent of the Tax Administration Program, which is the embodiment of the Revenue's mission: improve tax collection and simplify tax administration. The program contained the several tax reform enhancement measures, which included the use of the Taxpayer Identification Number (TIN) and the adoption of a new payment control system in simplifying net income taxation scheme. Ramos administration. The year 1993 marked the entry into the revenue of its First Lady Commissioner, Liwayway Benson Chato, in order to attain the Revenue's vision of transformation. A comprehensive and integrated program, known as the ACTS, or Action Center Transformation Program, was undertaken to relay and direct the entire organization towards the fulfillment of its vision and mission. It was during Commissioner Chato's term that a 5-year tax computerized project, or TCP, was undertaken in 1994. This involved the establishment of the modern and computerized integrated tax system and internal administration system. Further streamlining on the BIR was approved on July 1997 through the passage of EO number 430 in order to support the implementation of the computerized integrated tax system. Highlights of the said EO included the number 1, creation of the Port Revenue Group in the BIR, which is the legal and enforcement group, headed by the Deputy Commissioner, and number 2, creation of the Internal Affairs Service, Taxpayer Assistance Service, Information Planning and Quality Service, and the Revenue Data Center. Estrada Administration. With the advent President Estrada Administration, the Deputy Commissioner of the BIR, Beethoven Rualo, was appointed as the Commissioner of Internal Revenue. Under his leadership, priority reforms measures were undertaken to enhance voluntary complaints and improve the revenue's productivity. One of the most significant reform measures was the implementation of the Economic Recovery Assistance Payment (ERAP) program. which granted immunity from audit and investigation of taxpayers who have paid 20% more than the tax paid in 1997 for income tax, VAT, and/or percentage taxes. In order to encourage the educate consumer, taxpayer to demand sale, invoice the receipt, and the raffle promo, humingi ng resibo manalo ng libo-libo, was installation. In 1999, the large taxpayer monitor system was also established under Commissioner Rualo's administration to closely monitor the tax complaints of the country's larger taxpayer. The coming of the new millennium ensured with the changing of the guard in the BIR with the appointment of Dakila Ponesir as the new commissioner in the Internal Revenue. Under his administration, measures that would enhance taxpayer complaints and the debtor tax violation were prioritized. The most significant of these measures include full utilization of tax computerized of the revenues operation, expansion of the use of electronic documentary stamp tax metering machine, and establish of tie-up with the national government agency and local government units from the remittance of withholding taxes, and implementation of compromise settlement program for taxpayer with outstanding accounts receivable and dispute assessment with the BIR. Memoranda of agreement were also forced with the launch of the local government unit and several private sector and professional organization. Example: MAP, TMAP, PCCI, FFCCCI, etc. to help the BIR implement tax campaign initiatives. On September 1, 2000, the Large Taxpayer (LTS) and the Excess Taxpayer Service (ETS) were established under EO number 1752 to reinforce the tax administration and enforcement capabilities of the BIR. Shortly after establishment of said revenue service, the new organization structure was approved on October 31, 2001 under EO number 306, which resulted in the integration of fraction of the ETS and the LTS. In line with the passage of Electronic Commerce Act 2000 on June 14, the Revenue implemented a full integrated tax system (ITS) rollout acceleration program of facility the full utilization of tax computerization in the various operation under Program 7. Its back-end system were released in stage in RR8, Makati City, and the Large Taxpayer Service.
A royal administration following the momentous events of EDSA Revolution took in January 2001. Newly installed President Gloria Macapagal Arroyo appointed a former Deputy Commissioner Attorney Rene G. Banes as the newly Commissioner of Internal Revenue. Under the Commissioner Banes administration, the BIR's task was to transform the agency to make it taxpayer-focused. This was undertaken through the implementation of change initiatives that were directed to: Number 1. Reform the tax system to make it simpler and suit the Philippines culture. Number 2. Re-engineer the tax processes to make them simpler, more efficient, and transparent. Number 3. Restructure the BIR to give financial and administrative flexibility. And lastly, redesign the human resources policies, system, and procedure. Transform the workforce to be more responsive to the taxpayer needs. Measures to enhance the Bureau revenue generating capability were also implemented, the most notable of which were the implementation of voluntary assessment program and the comprehensive settlement program and expansion of coverage of the credible withholding tax system. Technology-based system that promote the paperless filing of tax return and payment of taxes was also adopted through the electronic filing and payment system or the EFPS with the resignation of Commissioner Banes on August 19, 2002. Finance Undersecretary Cornelius C. Gison was designated as the interim BIR Commissioner. 18 days later, on August 27, 2002, former Custom Commissioner Guillermo L. Paraino Jr. was appointed as the Commissioner of Internal Revenue or the CIR, barely a month since his assumption to duty as the new CIR. Commissioner Paraino offered a voluntary assessment and abatement program or the VAAP to taxpayers with the under-declared sales receipt income. To enhance the collection performance of the BIR, Commissioner Paraino adopted the use of new systems such as the recollection of listing of enforcement or the LIP system to detect under declaration of taxable income by taxpayer and the electronic broadcasting system to enhance the security of tax payments. It was also under the Commissioner Paraino's administration that the BIR expanded its electronic services to include the web-based in-application and processing an electronic raffle of invoice, receipt, provision of e-payments, gateways, e-substitute, filing of tax return, and electronic submission of sales reports. The conduct of a special operation on high-profile tax evaders, which resulted to the filing of tax cases under the Run After the Tax Evaders or the RATE program, marked Commissioner Paraino's administration as well as the conduct of tax compliance verification drives and the accreditation and designation of cash register machine and the point-of-sale machine. To improve taxpayer service, the Bureau also established a BIR contact center in the National Office and a lounges in the Regional Office. On October 28, 2006, Deputy Commissioner of Legal and Inspection Group, Jose Mario C. Bunag, was appointed as a full-fledged Commissioner of Internal Revenue. Under his administration, the Bureau attained success in a number of key undertakings, which included the expansion of PRIG program to the regional offices, inclusion of the new payment gateways, such as the efficient service machines and the GCash, and smart money facilities, implementation of benchmarking method, and installation of the Bureau e-complaint system is the new e-service that allows taxpayers to log their complaint against earning revenue through the BIR. The system or the NRCS was also undertaken to extend the use of the Bureau integrated tax system across its non-computerized revenue district offices. In 2007, the National Program Support for Tax Administration Reform or the NSTAR, a program founded by the various international development agencies, was launched to improve the BIR efficient in various areas of tax. On June 29, 2007, Commissioner Bunag relinquished the top post of the BIR and was replaced by the Deputy Commissioner for Operation Group, Lillian B. Heft, making her second Lady Commissioner of the BIR. Commissioner Heft will focus on the strengthening of the use of business intelligence by embarking of data, matching of income, payments of withholding, agent against the reported income of the concerned recipient, information sharing between the BIR and the local government unit, or the LGU, was also intensified through the LGU Revenue Assurance System, which aimed to uncover fraud and non-payments of taxes. To enhance the Bureau audit capability, the use of computer-assisted audit tools and techniques, or the CAAT was also introduced in the BIR under her term, with the resignation Commissioner Hefty in October 2008. Former BIR Deputy Commissioner for Legal and Enforcement Group, Sixto S. Escribias, was appointed as the new Commissioner of Internal Revenue. Commissioner Escribias' administration was marked with the conduct of nationwide closure of airing business establishments under the Oplan Candado program. A taxpayer feedback mechanism through the e-compliance facility accessible via BIR website was also established under his term when compliance on airing BIR employees and taxpayers who do not pay tax and do not issue OR invoices can be reported. In 2009, the Bureau revived its Handang Maglipan project, wherein the best frontline office will recognize for rendering effective taxpayer service. It institutionalized several projects to improve revenue collection, and these include Project RIP or Rest in Peace, intensified filing of tax evasion cases under the Reinvigorated Rate Program, conduct of taxpayer lifestyle, check and development of industry champions, linkage with various agencies, LTO, SEC, and etc. were also established through the signing of several memoranda of agreement to improve the specific areas of tax administration. Pinoy Administration, June 30, 2010, Attorney T. Mesa Cinto Henares, Rate Program, born on February 8, 1960, third of the 5 children of Benigno Aquino Jr. and Corazon Aquino. Fourth sister, Maria Elena, Aurora Corazon, Victoria Elisa, Cristina Bernadette, Alma Mater, Ateneo de Manila University, Elementary, High School, and College. Social culture. Culture promotes undertaken by regional programs that will increase awareness of our cultural diversity as a nation. Presidential Decree No. 96 or WANG-WANG. Cybercrime Prevention, the computer-related offenses. Human Rights Reparation Act Peaceful 57th Anniversary of EDSA Power Revolution. Economic. For peace, also known as Pantawid Pangkabuhayan sa Pamilyang Pilipino, given by DSWD to less fortunate household. Pantawid Pampasada, additional salary for public utility drivers amounting of 1,500 pesos. Duterte Administration, December 19, 2017, the Tax Reform for Acceleration and Inclusion, Train Law. Duterte Administration, on December 19, 2017, President Rodrigo Duterte signed the Tax Reform for Acceleration and Inclusion, or the Train Law, wherein exempted all taxpayer whose annual income is less than or equal to 250,000 to pay their tax. As a compensation, petroleum product and consumer goods with either natural, artificial, or high fructose syrup sweetener will get an increase in its price, with natural fruit juice and milk being exempted from this increase. The third promises checklist, accomplishments ongoing, bloody war on drugs, tax reform law, Bangsamoro Autonomous Region, universal health care, free college education, cutting red tape, aggressive infrastructure plan, environmental policies, Boracay, Manila Bay, Laguna Lake Rehab, and Canada Garbage. President-elect Duterte proposed the updated 10 points agenda. Number 1. Continue and maintain current macroeconomic policy, including the fiscal, monetary, and trade policies. Number 2. Institute progressive tax reform and more effective tax collection, indexing the tax to inflation. The tax reform package will be submitted to the Congress by September 2016. Number 3. Increase competitiveness and the ease of doing business. The effort will be drawn upon the successful models used to attract business to the local site, Davao, and pursue the relaxation of the Constitution restriction on foreign ownership, except regards the land ownership in order to attract the foreign direct investment. Number 4, accelerated annual infrastructure spending to account for 5% of GDP with public and private partnership playing a key role. Number 5, promote rural and value chain development toward increasing agricultural and rural enterprise productivity and rural tourism. Number 6, ensure security of land tenure, encourage investment, and address bottlenecks in the land management and titling agencies. Number 7, invest in human capital development, including the health and educational system, and match skills and training to meet the demand of the businesses and the private sector. Number 8, promote science, technology, and creative arts to enhance innovation and creative capacity towards self-sustaining, inclusive development. Number 9, improve social protection program including the government's conditional cash transfer program to protect the poor against instability and economic shocks.